All right. Good morning, everybody. Let me just make sure the audio is on. Okay, we're good. Okay, so we are going to do our first live session here, live trading session with you guys. And like I said last night, if you watched the recap video, I'm expecting price to come up here. There is some liquidity up here, and you can see in the 15-minute, there's some equal highs right here. 50% of the weekly range is up here. There's also all these new day opening gaps. So that is where I'm anticipating price to be moving to. We had, go ahead and turn on the news. Okay, at 8:30 we had CPI. You can see right here, 10:30 we have crude oil. So you can see 8:30, huge move. I'm never going to trade that. That's just asking to get rocked, truthfully. But what we're seeing right now, right, is if we look on the 15-minute, we've got these lows that were taken, okay, and we also have these highs here that were just taken. So we're keeping an eye on that. I truthfully think that price is going to come up here and take out this liquidity before really pushing anything lower in the week. So we're just kind of waiting right now. It's 9 a.m. I'm looking on the other chart over here on my 30-second chart. Price definitely respected a couple order blocks and some fair value gaps. So price is showing strength to the upside. You can see right here, we've got a nice order block being respected. You see, so price is just really, we had an institutional order flow entry drill right on the 30-second chart just now, right here in this candle. And it is just, it's just moving up there. That's exactly kind of what I was expecting it to do. So at the moment, we're just kind of waiting just to see, really what happens here. I'm trying not to take trades early on. When I've done this in the past and I've taken trades, before like 10 a.m., I've just, even if I have a good idea of where, the draw is, I normally end up just taking a bad entry and it just doesn't work out very well. So sometimes I'll be up a couple $100, and then when the morning opens, I'm like too eager, and then in a position and lose all that money, and it's not great. So right now we're just gonna watch price. Excuse me, I'm dealing with getting over a sickness currently, but we are gonna just watch price at the moment and let it do its thing. Let it go up to these new day opening gaps, just like we said yesterday it would probably do. That's good news, because that means that we were right with that particular bias. And yeah, we'll see kind of what happens here. We had some pretty good opportunity while I was trying to set this stream up. Like right here would have been, just a wonderful position to get into. If you look on the 30-second chart, you can see it just gives you a great opportunity. So yeah, it's this is actually a propulsion block, because you can see this is an order block right here. All right, so and then order block comes in, gets created off of another order block that's a propulsion block. That right there as an entry alone, would have yielded you pretty good. Could have put your stop, even if you wanted to give yourself some room, in targeting this 3R, almost 4R, really. So pretty good. That would be a really good trade. Very quick. As soon as I got to this liquidity up here, You could have easily, moved your stop break even or just above break even, like just up here probably, and then just let this go, and you'd be in pretty good profits right now. And honestly, you'd be at the end of the day, you'd be done. You'd be done with your day. That would be plenty. So currently today we are going to be trading our 4 combines, full accounts, and then we have 1 static 100K. That's what I have pulled up right down here. I've never traded a static before. It's a, I want to say $695 drawdown. So that's like once you hit that, you're done. But it's static, so it stays there, which I kind of like because I feel like it more so resembles like a actual account with your own capital, right? Like if you put your own capital in an account, let's say you put 10 grand in an account, and you get that account up to 2,000. Well, if you lose 2,500 of it, your account's not gone. Unlike with the full accounts and combines, it's like you get your account up 2,000 in profit, but you lose 2,500 and the account's gone. When it just, to me, it doesn't make sense. That's just setting you up for failure, truthfully, and setting it up for the prop firm to make money, right? I mean, I understand every business needs to make money, but that's really what it's doing, and it's creating bad habits. Like, that's an extremely bad habit to have. When you're trading, your trade psychology is that's not going to be good, right? So, yeah, you definitely. I don't know. I mean, to each their own, but I'm gonna try a static account out. It's the first one I ever tried. If I end up liking it, I will probably maybe get a couple more. But right now, I'm currently watching this. 50% of this wick right here. So we close below it on a 30-second, right into an order block on the 30-second chart. So probably gonna see some movement. Really what we should see, if it wants to come up and get this now, we really should see it come up there and get this, because it's right in a 30-second fair value gap, and it just taps into an order block. So it really should just hold price up. There's a 1 minute down here with another order block. So yeah, we're just kind of seeing what price does at the moment. Waiting until after 9:45, preferably 10 a.m. And we will kind of just let it do its thing, see what happens. Preferably, what I'd like I'd like for price to come up here and trade it up into these, maybe take out this liquidity, and then see if it has the wherewithal to show lower prices, right? Because if we go up to daily here, we have relative equal highs up here, right? But we've seen a pretty good, we've seen a nice all-time highs. We've seen a nice move down. We had a retracement, 50%, and a nice move down. So a retracement to 50%, up maybe into this fair value, this daily fair value gap would be acceptable. And then a nice rollover down. Take out this sell side, take out this. We've got daily fair value gaps down here. We've got relatively equal lows down here. We've got a weekly sell side here and here. So just all around, I see prices moving towards the downside. I see us finishing up the year lower. But again, like I said, we could see price come up into this area here. This is to the consequent encroachment of this daily wick right here. So I've got that marked out. I want to see kind of how price reacts in that area, and then we'll kind of just take it from there. So yeah, we're just gonna watch price and let it do its thing, actually. like to see it run up there right now. If we take a look at this too, like what else could we be targeting if we blow past some of this daily fair value gap? We got a buy side up here. So buy side right here. You can see it respected this 50% of this wick here. So that's where we were talking about last night, where we think price would go. So that's what we are currently looking at the moment. Kind of seeing this. I want to back test CPI, where seeing where the manipulation is, and then kind of watching, right? Because like, you take a look at this, you can see the manipulation on a 15-minute. Okay, and then we immediately start seeing a reaction, pump up, we get a drop down, and then a heavy pump up right here. Like, let's change the state of delivery. Like, beautiful right there. That, I mean, and then getting this propulsion block right here. I mean, that's a beautiful entry. I'm gonna back test to see, going forward in the future, if this is something that happens frequently, where just after 8:30, after they rip it in one direction and take out some liquidity and manipulate it, are they moving it in the opposing direction immediately after up into the open? Because if you just looking at this, right, you got the liquidity down here, they pump it down here just to buy, right? And anyone that was going short right here has their, and they're gonna have their stops up here. So pump it up here, and then rip it down, take out anyone that was long from down here that moved their stops here, underneath midnight price, just to rip it higher, right? Because that's that's the whole plan, is up here in this area. So Yeah, I'm curious to see if that happens frequently. You know, like even looking at this, like this entry here, stop. $129, like 384. That's not bad risk ratio, right? It's pretty good. I mean, it respected this, so probability of that is probably pretty high, truthfully. Wouldn't mind actually taking a position like that. Probably should. I mean, I'm kind of a little late, but it came back down there for me, and I didn't enter it. So any type of return here on a 30-second would probably be an okay entry. Is that great? It's in a 30-second fair value gap right now. I think I want to try it out. I'll just go here. Let's say risk. Just put them right here for this time being. I don't know why it's not showing. Okay, so we could put it down there. That's not bad, right? Because if we take a look at this with 3 contracts, it's only 223, so not a terrible risk. And then we'd be looking for 18972. I would say we'll take off 2 and then leave a runner. You can see that we have a one minute fair value gap right here too, so we would like this to be obviously respected. To push us up into here. And then if we're looking at like a runner, I don't know, I mean, that's gonna be, we can just let it go. We'll just trail our stop. So if it goes through this fair value gap, it really should be respected by this one. If it's not, it's going to take us out. And this is, I mean, it's a little risky. I mean, this is, you know, literally right before the open. It's not a great idea. It could come down here and take off all this liquidity, truthfully, before then pumping higher. You know, that's just kind of like, there is a, you know, fair value gap down here. So, but I'm not really, like, if it does do that, then I'll just, you know, you just take the hit and then I can come back and re-enter. But I really think, you know, at 9:30 open, it's going to pump like heavy up here. And then we'll just trail the stop losses. Oops. I see, so it's rejecting at this new day opening gap right now. So this fair value gap should absolutely be respected. I really should not see price come here. So we are going to lower some risk on this because price should not come back down here. If it does, it's coming to take this liquidity and coming down to this. All right, and since it's rejecting, probably high probability that, yeah, it's gonna hit this, it's gonna hit our stop right here. So we're gonna cut it because we already know that it's coming. See what it hit right there. So that none of that was respected. So we're gonna push down. You can see respecting this up here, right? So price could really start to look lower. We could be looking for lower prices now, and we just kind of have to see. So there's 9:30. I like to go to regular trading hours, and the settlement price, range gap low. Look at that rate, you know, first 70% of the time, 50% of this range. Okay, so I'm actually starting in drawdown today, which, you know, that's never great. It's kind of why I told you guys, like, I don't like to trade the, I'm not huge on trading before 9:30 because it usually ends up in a loss. So we're down here in this fair value gap here. 30-second order block. So we're just gonna let price do its thing. So we're gonna wait. It's kind of all over the map at the moment. Is respecting a 30-second fair value gap currently, but it could be, that could change very quickly here. But what's interesting to see is that you can see here that these bodies are respecting the new day opening gap on September 5th. So that's why I said when I took this long position, it was super risky. That's why I have my wrist extremely tight. You know, it's like $130. I'm not risking a lot there because, like, there's a low probability that it's going to continue up to this buy side liquidity up here, currently at least at that time of the day. So just going to wait a second here and let price kind of tell me where it wants to go. If we start breaking down lower, there are kind of some key areas that we'd be looking for. Just like yesterday when we talked about where we thought price was going to come up here to these new day opening gaps, potentially even higher up to this 50% of the weekly range before going lower. So we still have that in mind. They could just be taking it lower right now, just to kind of put it in a discount, so that way they can buy and push it up there. So we just kind of need to wait and see what price wants to do at the moment. Good heavy move down right there to fill in the opening range gap low finally. Below the 830 price. Typically that's a price levels. That's why I have these marked out. Midnight, 7:30, 8:30, 9:30. Those are just key levels that price typically reacts off of and has some form of reaction or you know, price movement typically. You can see here 9:30 up and then shoot down. So I'm watching this 15-minute here. We've got a 15-minute fair value gap. So I'll be curious to see if this turns into an inversion here, right? We've got 9 minutes before the candle closes. That would be really nice. You can see here, so if we go into regular trading hours, oops, wrong chart. This is the first fair value gap formed between 9:31 and 10 a.m. Price usually reacts off of that. So I'm keeping a close eye on this at the moment. This could be a pretty decent opportunity to go short. There's a lot of liquidity down here. We respected this, so this is really telling us that price does not want to go up to this other area at the moment. So I want to see if price will return back to that first fair value gap. You know, if we were looking for shorts, something like this. Would be good. You know, 3 contracts, 640, so not bad. Puts us at our daily goal, maybe just under it because we have the $120 loss. So we're gonna kind of just pay attention here. If you take a look at this order block, pretty good reaction off that, probably right to the tick. Truthfully, if you look at the, yeah. So that's you need to keep that in mind there. But what that could do is push it up here, which would be great. Take our short entry stops up here. That would be, you know, beautiful, truthfully. And this definitely looks like a market maker somehow kind of coming together. So I want to wait for it to come up here, see what happens. It's getting pretty close. There's a 30-second that's a little bit deeper in there, so it's about almost halfway into that fair value gap. So I want to see if price will make it there, and then that'll lower some of my risk. So like right there. Okay, and then we'll go ahead and put our buy stops up here. Okay, and then what we'd be looking for lower prices. 2 contracts. Take off 2. On here. And then I guess if we were looking at like a runner, low a day is all the way down here. I'll show you in a second. I'm just doing this on my broker. I figured out how I used to have to go through each and every account down here, and it was just a pain in the ass. So now I figured out that I don't have to do that. I can just do it on the broker and let it go. So now you can, like, we're pretty far down. So this is, I'm gonna move the stop above break even. I don't want, like, price should not come back up here at all. So we're in a pretty good level. We're gonna let this continue to run down. I do think we're gonna come down here and get this, but price, that's a big move. We should not trade back up all the way up here. There's a 30-second fair value gap that's just above it, but I think it's gonna, we just tapped it now. I think it's gonna really hold price lower, and we're gonna get a good movement, good push, good move down to this first liquidity. And then once we get here, we're just gonna trail the stop as close as possible to this last one here. But we could tap this opening range gap low in the 830 price before moving lower. That's you know, totally acceptable. If we come back and I get stopped out, then I may you know, re-enter a position, just because I truthfully think that we are definitely going to go lower here. But I just don't think we're going to come all the way up that high. Not you know, retrace all the way back up there. That would be kind of, if we did right now, that would be shocking, truthfully. Let's just in case. Because we could tap this for another potential entry, but I really, like right there, I really do not foresee us moving any higher than this. If we do, you know, then you know, I'm wrong, but kind of working that 30-second fair value gap in the lower half of this 1 minute, the first fair value gap. We really would like to see like a heavy push down at this point. The 30-second buy side imbalance, sell side inefficiency. We'd like it to 30-second to close below that, and then use that as an inversion. So now it should not come back to up here, like, at all. If it does, then I'm fully wrong on this. So that was that 30-second inversion. It just tapped it now. I don't have a 30-second with trading view yet, so I can't show you. I'm utilizing my broker account to see this. I do want to put, I need to keep my stop at like where I place it. I have the tendency to move it just a little too soon. We're not even at the 50% level of where my original target is yet. That would be like right below the 730. That's when you should be moving your stop. So 50% of whatever this range here. Once price is like trading like in that area and through that area, that's when you want to be moving your stop. At least that's what I've learned from ICT. When you would move your stop break even, because you got to give price the ability to kind of work what it's going to do and grab liquidity from people moving stops sooner, and just kind of let it do its thing for a second. Once it gets to this area here and it's trading down here, there really should not be a reverse all the way back up. This first attempt was just, you could see it was basically respecting this order block and this propulsion block. So you have an order block right here that's created at 730, and then this propulsion block that's been built off of that. So it's essentially respecting that. So okay, now we're right in this area. I want to, like, right now it'd be great if we can see like a heavy movement through this. I'm okay with moving the stop now above these highs and just kind of letting this run. If it comes back, that is what it is, I guess, at this point. But I think we're going to push down here. We're going to hit that first TP pretty quickly. Yeah, we want to see nice heavy movement. Just blow through all these fair value gaps right here. We can move the stop now right above these highs. Okay, and then once we get this first target hit, it would be great. We're just gonna be very particular with the stop, and every time that candle closes makes a high or a wick or anything, that's where we're gonna move the stops to. And then we're just gonna kind of trail this all the way down there to see if it comes down for the low of the day. And truthfully, I mean, it could go even lower, but I think that's a pretty good level where we would expect price to run to. So right there, the 30-second fair value gap, tapped into it. Now it'd be great if we see a rejection lower. That would be institutional order flow entry trail. Just pumped it lower. We would just, like, let's see, what time is it? 9:48. So really, we got crude oil at 10, right? So we want to see this just push down here. It's about to be 9:50 to 10:10 macro. So we do not want price to move up. It's in a fair value gap right now. It's tapping an order block in a 1 minute. We definitely do not want to see it continue up from here. If it does and stops us out, it stops us out. It is what it is. But if we're looking for lower prices, if we're going to go down to the liquidity that I've marked out, price should reject. So we want to see, what we're going to watch here is we're going to see how price reacts off this consequent encroachment of this wick right here. See a good push down. We're in the 950 to 1010 macro right now, so we should see just really just good movement straight down to our first target. That liquidity there. Gonna move our stop to this high. Should not trade back up there. So you see how its price is kind of struggling at the 50% level of that wick. We don't want that. We want it to, in the next candle here, to close. Otherwise, it needs to push through that. Otherwise, we may just take off what we have here. Like this, yeah, this candle needs to have some like movement through that 50% wick. We got 13 seconds. If we kind of struggle here, you can see it's at that 7:30 time frame level. That's not a good indication that we're going to continue lower. Even if we did, yeah. So we're going to take it off right there because it's not. It's respecting this. You can see this, you know. So it's just not showing us that it wants to get through this level at the moment. It could right here very easily, but I have had the tendency to be in trades and not take them off and not take profits, and then have it come all the way back into drawdown, and that's just not what you want to do, preferably ever in any situation. So up $200 right now. We are not even at 10 o'clock, so we're gonna kind of let price do its thing here. Since it's respecting this, right, there's the balance right here that it's respecting as well. Okay, so now we got through it. Nice heavy push through it, just like we wanted, right? It's okay, we took the position off. Nothing wrong with that. We took our profits. Okay, it's getting real close to our first target there. So that didn't close below it. It definitely needs to close below it. What's nice is like, you know, it's not even 10. We still could take another trade today. There's still plenty of liquidity down here that we could be going for. Right, that's a level right there. Looking on the 15-minute, we swept the 15-minute highs, respecting the new day opening gap. If we get like a good close below this 15-minute swing low right here, I would love to see this turn into a change in state of delivery. And then we could be looking for lower prices, maybe down to the new week opening gap, August 9th to 11th, down to this daily volume imbalance right here would also be a potential opportunity. of a target where we could go. So we are just gonna watch and let price kind of do what it wants to do at the moment. We are up on the day, $200 in all 5 accounts. So we're gonna be patient. 3 trades max a day, so I've taken one, took a loss, took another one, and we are up. So you see how, like, look at how price is reacting right here too. So it's like respecting that premium wick here, or discounted wick, sorry, and it's struggling at the 7:30 time. So it's like, you know, it's just trading back and forth in between this right now. So that's why I took my position off. I'm not comfortable with, it's not, price isn't running to my target when it should have. You know, there's liquidity right here, and if it gets to this area, it shouldn't be lollygagging back and forth. If it's going to go here at the moment, it needs to go. So we could trade back up to the opening range gap low. We could even trade all the way back up to the first fair value gap up here, that 15-minute fair value inversion. Right, so here's that inversion fair value gap. There's a 15-minute fair value gap right here that's starting to be created. We still have 3 minutes left on this candle, but so we've got the first presentation, and we have this here, 15-minute and 15-minute. Okay, so I'm gonna wait. I would love to see price like blow through this swing low on this 15-minute with some displacement, you know, and then we could look for down here liquidity. Liquidity here will probably be taken, and then potentially even come down to the volume imbalance down here, and these equal lows. So that's what we're going to look for at the moment, and we're going to watch 15-minute, 1 minute, 30-second. So there we go. That's exactly what we wanted to see. So if you think, you know, we had our stop was just above these highs, never even came up there. So still would have been okay. But again, like I said, you never know what price is going to do. So if you feel like you need to exit a trade, I've always been told to exit the trade and take the profits, and you can always re-enter a position. So we had a good candle break and close below that, so that's good. That's now a good level. We've got this wick right here. Love to see it respect that. So here we are at 10 a.m. for that liquidity. So there we go. Just like that. So now here's where we could take an opportunity to potentially enter another position for that additional liquidity lower, if it gives us the opportunity to. Like right here. We're watching a 30-second. We want to see if it respects this fair value gap. We're below midnight price again, so we have to be kind of mindful of that. You see how it didn't close this 15-minute? No candle close, no candle close. So that's not a good sign. I mean, it took out the liquidity that I said it would. But we have not closed with a candle close with displacement below this. Take a look at the 5-minute real quick, see what that looks like. Again, not showing weakness at the moment. So, again, keep in mind, right? We've closed the opening range gap high and low. There's still that buy side up there with all the cluster of new day opening gaps. Previously weekly range 50% level. Struggling at the midnight price. It's just respecting. I mean, you can look at this look at this candle. I mean, right to the tick hits it. So you can see here, if we mark out this wick, 50% of that. Look at that. So that's not showing you weakness. when you're watching price action, that's not showing you that it wants to come lower to get this liquidity and come down to the volume imbalance down here and the new week opening gap. It's not showing us that at the moment. So you have to be patient. That's one thing that I need to work on a lot. My recap video yesterday, I share with you guys that I totally blew six accounts that I had. That was up like 2,600 in each account and just blew them all in one day. Over trading, not following rules, so over leveraging, right? Gambling, trying to make that money back, which is not what you want to do. You want to trade price action, and these are things that I write down in my journal. And it's just a learning curve and just something that it takes time. It takes time to master this, and I'm not in any rush. I want to do it right, so. It's kind of nice that we saw this price react on the 730 level. It came up and then rejected. The fair value gap right here as well. Being respected. A little coloring outside the lines, but that's okay. Respects the 50% constant encroachment of that. Pushes it down, takes the liquidity here, and then it's struggling right here. So there's two things happening. It's either A, spooling to push up higher, or spooling to continue to push lower. I'm not looking to take a short until I see this 15-minute candle. It's got to be a good close though. Like, I would honestly almost prefer it to like take out this liquidity down here with close and then retrace back up for me to get into a position to come down and take out, the volume imbalance, this liquidity here, new week opening gap, so on. Looking at the 30-second, the price is just back and forth. There's really no PD arrays that it's disrespecting or respecting. It's just prices rebalancing immediately. So we're gonna wait. Like I said, I want this to close here. We're up on the day, which is good. Gives us some leverage from this trade right here down to this level. Started having some difficulties, so original target was right here. You can see that when you go back and rewatch the video. Second target was this one right here. So we respected a 30-second fair value gap right there. So I kind of feel like we are going to continue lower here. I'm going to take a short entry, and I'm going to make this really, really tight. I don't think we would trade to the 50% of this wick at all. So and then remember our second target. That's where it's about to go. I'd say low a day by 2 here, and then we will take 1 off. Let me see what's a good price level. 1704. Okay, we'll do 643. So this is where we're gonna go. We should, like I said, price should not come all the way back up to that wick up there. It's in a 30-second fair value gap right now, respecting it. So I would like to see a pretty good movement here down to that second target. Once we get that, I will put stop, break even on the second trade. Because it's still struggling at this midnight price, which is not great. Like I said, I want to see it blow through this wick, this consequent encroachment of this wick. Like right here, heavy. If we can be really heavy, push through this, then I'll feel pretty good about that limit order. I'll put stop, break even. Truthfully, even right now, I really don't foresee it coming. Yeah, I like that. Let's go a little heavier than that though. Yeah, we really need to see this push. We're going to take off a lot more risk. Okay, right here, heavy push. Yep. Okay, we're going to go at these highs here, break even, stop. Totally fine. Keep going a little bit more. A little bit more, come to pop up. You're almost there. Okay, there we go. So we'll get rid of that, and we'll do buy stop. Got one left, and we're just going to kind of keep trailing the stop down to the volume imbalance. Like I said, that's the ultimate goal. Let me just make sure all these accounts are okay. We're good. Okay, so we could then, once this candle closes, so then we can move our stop above this high here. Price should not come back up. If it does, it's fine, whatever. Doesn't matter. We are up 7, almost 700 on the day right now. Okay, and here moving a little bit closer. Four seconds. 1. Okay, we'll leave it there. And we may get stopped out right here, which is okay. So this trailing technique is, I learned this from ICT. Everything I've learned is from ICT. I truthfully think it's the best mentor. I've been trading for 9 years, and that dude's intelligent. He's extremely intelligent on trading. I think I'm a very analytical person, so the way that he created his concepts are definitely around that, and I just think that that's really smart because the markets are very algorithmic. So yeah, I want to see nice just blow right through here. I'm going to take off that, honestly, and then we're just going to keep trailing this to see how far we can go. Right, because we could come all the way down to this new week opening gap, so it's not like I don't need to have a limit order in right there. It tapped it, and it could stop me out right here, which I'm totally fine with. But just want to see if we explode. Leave a runner running, right? That's the whole point of it. Okay, there we go. So that was the trade. I thought it was, beautiful trade, honestly. Exactly what I had talked about when I started the stream. Exactly what I talked about yesterday. What my expectations were is for us to come up here, take the liquidity out, tap into these new day opening gaps. You can see up here, I did enter in the first fair value gap. If I would have held this position all the way down, that would have been, just nasty trade. But all in all, those are both really great trades. We entered on, just to kind of give you a rundown real fast, so 15-minute sweep, that's the first thing we look for. So I will put out my step-by-step plan. So step 1 is we are looking for a sweep on the 15-minute. So that's what this is right here. Sweep of liquidity in the M15 in a reaction of a higher time frame. PD array, 4 hour, 1 hour, fair value gap, whatever it may be. If we were to go up to a 1 hour, okay, what do we see here? There's a fair value gap right there. If we were to go up to a 4 hour, nothing on a 4 hour. We have a volume imbalance on a 4 hour, which is a new day opening gap. So higher time frame, PD array, new day opening gap being respected. So boom, both of those are checked. The second step is displacement. Okay, so we've got displacement right here, this candle. Move this over if I can zoom in for you guys a little bit. Okay, so this candle you can see we displaces through. Here's the lows. There's the change of the state of delivery. Okay, so good displacement. You see it trade back up, taps into this fair value gap right here, rejects down, creates the first fair value gap between 9:31 and 10 a.m. So it's not 9:30 because if you go to regular trading hours here, there's nothing created right here. It's this candle that creates it. Okay. We always mark out opening range gap high and low. 75% of the time we're expected to trade at least 50% of that. It traded all the way down to the lower quadrant and then traded back up, tapped in that fair value gap, ripped back down and closed it. Now we are after, this is 9:38 a.m. so we want to be taking our entries at a fair value gap, preferably after 9:30. Truthfully, if you want to get like consistent after 10 a.m. is probably best. That's kind of what I'm trying to work on. That's again why I closed this position too, so I'll go over that. So it entered here on the first fair value gap on a 32nd. Let me bring this over. You can see here 32nd fair value gap. This is the entry. Okay, so it tapped into this 32nd fair value gap right here. So that's where I entered. Boom. Expecting, okay, lower prices. Great. So respecting the 1 minute, and then a 30-second presented itself. So I can go ahead and take that entry, and comes down. I mean, no drawdown really at all, barely anything. Taps in the fair value gap over time, rips lower. I move my stop. I kind of was playing with the stop a little bit. I want to wait till I get to 50% of where my target is before moving the stop, so that's what I did. Moved it, and then as we got to here, we did color outside of the lines here. This candle, truthfully, just kind of, you know, as you're trading and as you're kind of growing in your experience, it's just things that you're going to learn about yourself psychology-wise, and I wasn't comfortable. We were at the 7:30 time frame. That's a key time frame. We were struggling at it. We did not come down to take my target like immediately, like how I wanted it to. We were inside of that 950 to 1010 macro, and we came down pretty good, but then like, you know, pushed right back up. So this one candle pushed up pretty heavy. I should have let it close, but I didn't. It's okay. I took my profits. It was like $199. And then I said that in order for me to take another short, I would want change of state of delivery on the 15-minute, which we were starting to get that. I didn't let the candle close like right here. Like this is perfect. You know, huge displacement. We're probably going to continue much lower today, down for these equal lows like I had mentioned. We'll probably see somewhat of a retracement right now, like you're seeing in the 1 minute, up into this fair value gap right here. Potentially could just be in this one. This could be a breakaway gap, and then, you know, institutional order floor entry drill, boom, lower. So waited, we got to right here, and I saw this break. That was really good. Can't hit my target. That shows me that, okay, we have some weakness, but we are at the midnight price, which is a key level as well. We're at 50% of this wick, and it respected it. So wasn't ready to take a short then, waited, and then as you can see, I ended up taking a short right here. This is a 1 minute order block right here, negative order block. So 1 minute order block on the 30-second chart. I will drag over for you guys. You can see this entry. There's a 30-second fair value gap right there. Okay, so price comes right back up to this 30-second fair value gap. You can see it right here. So boom, that's where I entered short. Pushes down. That's exactly what I want to see. Makes me feel way more comfortable because then it creates a fair value gap. So another one. So we're respecting it here. So I'm feeling good. And then we see that huge displacement move down. Pushes all the way down, right down into my target, first target here. And then I showed the stop as you saw. And then now as you're seeing, you know, we're respecting that volume imbalance. So Probably this is going to hold price up a little bit higher up in here. We could come back to retrace back up to what I would say this would be right here. Would be a propulsion block. Oops. So a midnight price. So we could come all the way back up there. It's probably highly unlikely. Go ahead and mark this out. And then okay, so probably what will end up happening is we will trade up into here. If we take a look, I bet you there's a 5-minute fair value gap created. Yep. So most likely we'll trade 50% of that level before making a continuous move lower. All in all, pretty good, pretty good trade. You can see exactly what I look for in a setup. Higher time frame, liquidity sweep on a 15-minute. Always look for that first before I even consider taking a trade. Then I look for a higher time frame, PD array being respected. So that 1 hour fair value gap was being respected. This new day opening gap from September 5th was also being respected perfectly. Look at the bodies of that. Beautiful reaction. 15-minute, you can see a nice wick, so that's great. This is your low risk buy, turtle soup right here. And then right here would go ahead, because this is I bought right here, expecting prices to go higher. Talk about the beginning of the stream. Had a very tight stop. It was like $140. That was a loss. So took that loss, and then you can see the respecting of price, respecting this higher time frame PD rate. We see the displacement candle right here, boom, beautiful. And then we wait to see the 9:31 to 10 a.m. first fair value gap as some additional confluence, which is what we get right here. So then we enter here, and then again exit here. So this trade was just over $380, I want to say. So that put us at just about $200, like $199. And then re-entered here, and then you just saw, I just showed you guys here, but I'll show you again. So 665 in pretty much every single account. That's great for the static account. So now I've got, $1,300 in drawdown on the static account already. Beautiful, that's exactly what you want with that. Because you can see it does not go anything, it does not trail. So $99,375, that's when the account's blown. So I think I'm going to like the static account a lot more than these other full accounts. You can see I've blown and failed 50 accounts. So I'm very transparent with my trading, and I think that's something that people will kind of respect and appreciate, because trading is very difficult. So it does take time and energy. Don't rush it. Take the time and energy that you need to master this craft, and I wish everyone the best of luck. I will see you guys next time.